Your bank account is lying to you. That number you see when you check your balance, it represents less purchasing power today than it did yesterday, and tomorrow it will represent even less. But here's what's really happening. This isn't market forces. This isn't capitalism. This isn't even economics as you understand it. This is the most calculated wealth extraction system ever designed, operating in full view while remaining completely invisible to 99% of Americans. The United States government has a problem, a $38 trillion problem. That's $289,000 for every taxpayer in America. If you make $50,000 a year and paid every penny in taxes, it would take you 5,180 years to pay off your share. And it's growing by $1 trillion every 100 days. At current rates, by 2030, the debt will exceed $45 trillion. By 2035, over $60 trillion. The mathematics are inescapable. The debt can never be repaid through conventional means. But here's what nobody's explaining. They already know this. The Treasury Department knows it. The Federal Reserve knows it. The Congressional Budget Office has modeled it. And they've already implemented the solution. Not a solution to save you, a solution to save themselves. And the mechanism they are using will make you poor every single day for the next decade while the government's balance sheet magically improves. Welcome to Finance Historian, where we expose the mechanisms of global finance that operate beneath your awareness. Before we dive in, hit that like button and subscribe if you want to understand how money really works. Comment below with where you're watching from and what percentage of your savings is in cash. I guarantee that number is about to change after you finish this video. Let me show you something that will fundamentally alter how you see every economic decision being made right now. In 1980, the average American worker could buy a house for 3 times their annual salary. Today, it's 8 times their annual salary. But wages haven't stagnated. Median household income has actually increased from $21,000 in 1980 to $74,000 today. That's a 252% increase. So why can't people afford houses anymore? Because the dollar has been systematically devalued. What cost $1 in 1980 costs $3.78 today. But that's the official inflation rate. The real purchasing power destruction is far worse because the way they calculate inflation changed in 1980, specifically to hide what's actually happening. If we measured inflation the same way we did in 1980, the real rate would be between 8% and 12% annually instead of the reported 2% to 4%. This isn't accidental, this is policy. The Federal Reserve has a dual mandate, maximum employment and stable prices. But here's what they don't tell you. They have a third unofficial mandate that supersedes both of those. Keep the government solvent. Everything else is subordinate to that objective, and the tool they use is the most elegant form of theft ever created. The controlled devaluation of your savings to finance government operations. Here's the mechanism. The government needs to borrow money to function. They issue bonds. Investors buy those bonds expecting a return. But if the government had to pay market interest rates, the system would collapse immediately. Interest payments on $38 trillion at a 6% market rate would cost $2.28 trillion annually. That's nearly half the entire federal budget consumed just by interest payments. Before a single dollar goes to defense, Medicare, Social Security, or anything else. So they don't pay market rates. They manipulate the entire financial system to artificially suppress interest rates below where they would naturally settle. And they do this through a mechanism so sophisticated that most economists don't even recognize it as manipulation. It's called the Federal Reserve's balance sheet operations, and it's the largest financial intervention in human history. In 2008, the Federal Reserve's balance sheet was $800 billion. Today, it's $7.8 trillion. Where did that $7 trillion come from? They created it out of nothing, electronically. And they used that created money to buy government bonds and mortgage-backed securities. This accomplishes 2 critical objectives simultaneously. It provides unlimited financing for government debt, and it artificially suppresses interest rates across the entire economy. When the Federal Reserve buys government bonds, they're creating demand that wouldn't exist in a free market. That artificial demand pushes bond prices up and interest rates down because bond prices and interest rates move inversely. The result is that the government borrows money at 2% to 3% interest instead of the 6% to 8% the market would demand. That's a subsidy of $1.5 trillion to $2 trillion annually, paid for by everyone holding dollars. But the real genius of the system isn't just interest rate suppression. It's the coordination between monetary and fiscal policy to create what economists call the fiscal dominance regime.